Hi, I am Anna. I come from www.ntvforex.com. Major markets consolidate as traders begin to look ahead to Fed Chair Powell video analysis. http ntvforex.com News ID 79DF4D8262020 11:21:51 AM Market Overview. The sense of that major markets are now starting to brace themselves for the impact of the keynote speech of Fed Chair Jerome Powell at the Jackson Hole Economic Symposium. Powell gives his speech tomorrow at 1410 BST, and it could be a momentous occasion. He is expected to lay out the pathway of forward guidance as the Federal Reserve navigates for monetary policy in the coming months and potentially years. This could have a significant impact on Treasury yields, the US dollar, and across major markets. This morning we see that yields have picked up, the dollar a shade higher and precious metals drifting lower. Equities are also consolidating. To an extent, this is unwinding some of yesterday's US dollar weakness that came in the wake of the significant downside surprise of US consumer confidence, which fell back to multi-year lows. However, with a limited economic calendar today, markets are likely to settle down now in readiness for Powell's speech tomorrow. Wall Street had a mixed session yesterday, although the S&P 500 managed to post further all-time highs 0.4% at 3,443. U.S. futures are cautious today though, with the E-mini S&P 0.1% early today. In Asian, there was cautious, with the Nikkei almost dead flat, although the Shanghai Composite was 1.4%. In Europe, the sense of consolidation is also there, with FTSE futures 0.1% and DAX futures 0.1%. In Forex, there is a mixed look to majors with little real direction. Euro is slipping slightly and NZD is gaining once more, a turnaround on yesterday's moves, with other currencies mostly hovering around the flat line. In commodities, there is an ongoing drift back on gold, another 0.5%, whilst oil is consolidating 2 days of gains as the Gulf of Mexico prepares for Hurricane Laura. It is a quiet European morning for the economic calendar today. Into the U.S. session, focus turns to the core durable goods orders ex transport at 1330 BST, which is expected to improve by 2.0% in July after 3.6% in June. The EIA crude oil inventories at 1530 BST are expected to show another drawdown of 3.8 M barrels last week from 1.6 M barrels the previous week. NBSP chart of the day. A USD CAD. The US dollar has shown hints of recovery across several of the major pairs. However, there appears to be little sign of it on USD CAD. The market may have consolidated over the past week, but there is nothing of real note on momentum that suggests an imminent recovery. A pivot resistance at 1.3230-1.3245 has continually capped the upside. Even if there was to be a tick higher, the resistance overhead is huge now. We have previously discussed the importance of the old long-term pivot band around 1.3300, a level which is now key resistance. The break below the June low of 1.3310 came in early August, and we believe that this has opened the way to test the key December-January support around 1.2950. A major trend lower of the past 5 months now sits bang on the 1.3310 old breakdown level, whilst there is a slightly sharper downtrend channel of the past month at 1.3250 today. This channel is now a confluence of the resistance from the August pivot at 1.3245. Subsequently, we would see any near-term attempt at a rally likely to falter between 1.3245-1.3300, which is a sell zone now. We favor a retest of initial support at 1.3130 before the way is open towards 1.2950. Above 1.3400 would abort. NBSP Brent crude oil. A second successive positive close and bullish candlestick with a decisive move higher has shifted the near-term outlook once more. This seems to be a fairly consistent playbook for oil right now. A consolidation that is bought into that leaves another higher low before a breakout above resistance. The problem is that time and again, the breakouts almost immediately are then beset by the next phase of consolidation. From Friday's low of $43.60, leaving a support band $43.60-$43.90 in place, the market has pushed above initial resistance of last week's high at $45.55 and also that of the week before at $45.80. This now opens a test of the August multi-month high of $46.25. However, given previous bull failure on breakouts, this is not a market to be chasing breakouts. Invariably there is a better opportunity a few days after any breakout, to buy into weakness. Despite there being little real resistance until $53.10, $53.90, it is still a very slow and steady run higher not to get too excited about. NBSP Dow Jones Industrial Average A pullback has just tempered the bulls slightly, but the breakout to multi-month highs remains on track. Moving strongly higher in recent sessions, the Dow has bolstered support at 27,525, 27,580 as a key near-term gauge for the bull run. Breaking through 28,000, 28,155 resistance this week means that this has become the first area of support. This held up well to an initial intraday slip yesterday, and it seemed that the buyers were happy to come back in again. There is strength to the momentum, but also a risk that with the rally just hitting the buffers yesterday, with the RSI around 70, this could lead to a near-term stumble. We would still be looking to use weakness as a chance to buy though, with any supported slip into an area between 27,500 and 28,000 being an opportunity. Below 27,525 would disappoint, but the bulls are broadly in control above the near 5-month uptrend at 27,075 today. NBSP. Read more analysis here. EUR USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.